welcome to Weekly Open. I'm Brian here with Cred and Don, and we are excited to have you here. We're also excited to have FTX as our partners. Go to weeklyopen.com/FTX, where you can trade directly from one asset to the other. If you need to capitulate in this market, you can do it there on the FTX app, or if you're looking to buy the dip, it's all available. Dollar cost to average, easy purchasing, all the good things that you need. Do it all on the FTX app, weeklyopen.com/FTX. Thanks to them for being our partners. Let's get to the show. Gentlemen, how you doing? Don, you're on top. How's it going, bud?
Very, very good. How are you?
I am doing great. Cred, how are you?
Yeah, I'm fine. I've just noticed that a lot of the on-chain LARPers have just become full-time macro analysts now, and it's so tiresome. It's like, mate, just take a fucking break. Like you've gone from one creative writing endeavor, and you don't need to go immediately to the next one, right? You can take a bit of a breather, because it's one of two ways, right? They either, when their floor model, whatever bullshit made-up model gets invalidated, they just call it a black swan. And that's really convenient because, like, whenever you're wrong, it's a black swan. The amount of hubris needed to seriously hold that opinion is, like, absurd. But then the alternative is you just move on to fucking making shit up about something else. And it seems like for some reason, there's a very natural transition between LARPing about on-chain and now LARPing about macro. Now, I've never seen such a seamless transition in my life. So I'm just kind of, enjoying that. But yeah, I'm great. I'm otherwise very, happy and shit.
I want to get right to the markets, and the thing that I think would be fun to start with is just seeing what happens overnight, right? So, whenever we have these times where everything's super volatile, we end up with like this insane like futures Sunday night versus Monday morning open thing, and then how that has follow-on effects with crypto. So I don't know if y'all were paying attention last night, but my time, 5 p.m. But futures open and stocks are down, but more importantly, oil's up like 10% on a gap. Gold hits 2,000, copper $5, wheat limit up, like all this kind of absolute mayhem stuff. And we pretty much completely faded it by the actual market open this morning. What does this make you think about, I guess? Does this matter for crypto markets? Is it anything that we can try to use to our advantage, or is it just, we're at the whims of the market?
I'll take a swing. Yeah, I think as generally speaking, right now, this is, maybe the worst time possible to make this point, but fading the decoupling guys has been one of the best trades available in the market for weeks on end now. The basic premise being that every time Bitcoin has gone up slightly, or even if in some cases the bar has been lower, every time it's dumped less than, US S&P 500 or NQ, whatever it may be, the whole case became, well, crypto is decoupled and therefore this is the start of a larger trend, etc. And almost every single time that there's been a notable decoupling, and using that word is even absurd because it's like just a very short-term move within a day most of the time, that's been like a crazy, crazy top signal consistently. So I'm not... I still think it's safe to assume that we're broadly correlated until proven otherwise. It's just people's proven otherwise seems to be 1 or 2 days and not, some sort of longer period of time or secular trend. It's not as much commentary on the exact futures open and what to do. It's more of a kind of big picture extrapolation from that, which is, a lot of stuff still looks very strange, like risks getting battered, March and all the Fed tapering stuff's coming up this month. We saw gas go up, wheat, and the commodities guys are having fun. So it's still a bit shaky at best. So in those kind of shaky circumstances, you're going to want at least more than 1 day or like one candlestick of decoupling data before shoving a bunch of risk in. But it gets a ton of engagement on Twitter, so I can understand why people do it. I just don't think it's the best trade available.
It's really tempting for me to get caught up into kind of these low time frame, what's happening type of environments, because you look at oil was up 10%. And then completely faded it into the weekly open, but now recovering. Bitcoin and Ethereum immediately responded when those futures opened to the downside. But then as everything started calming down, like there was a pretty clear bid on crypto going against kind of all the actual risk off trades, because like Bitcoin and crypto is clearly not acting in a risk off manner. So it's just been interesting to see, because now like the S&P and whatnot, it looks like crap today. It's down 1.5%, but like on these micro time frames, you're seeing people step in on crypto with like literally a 5-minute green candle on the S&P, and like you're seeing buying happening in crypto. And it makes me feel like maybe we're just a really illiquid market, and there's people that are heavily invested in crypto propping it up or something. And I'm trying to make sense of it, but your point is like well taken. Like generally, I feel like fading those correlations is probably dangerous.
Yeah, I totally agree as well. I think it's in general, you get these. I think crypto has been stronger than the S&P. Like you'd expect more downside than we actually got. But every time people get loud on Twitter, it's not the time to kind of jump into that trade. That said, I think there is definitely something of like a industry bid of sorts at 38K ish, where some larger players just keep on stepping in to kind of save the market. Kind of feels that way anyway. So yeah, until that goes, I don't think we're going anywhere.
It gives me FOMO, but it also makes me scared. Like if you're, like if your industry players are the one propping it, and it's not people interested in crypto from like outside, then you're not really bringing new money in. So that makes me a little nervous.
It depends on how much money they have, right? Can they buy enough to make it go up? If they cannot, and they're like trapped at 38K and price goes to like 30.
How much did they dump on us at the top to be able to buy back now?
Yep. But I mean, we've done this before, right? Basically the 6K floor was
Here we go.
Similar in a regard. And I think the only reason why it really dumped through was because of like all the hash wars and everything, right? So if you don't get another kind of time like that again, we don't necessarily have to break the 30K floor that we're setting. It's just going to take a while. I think we could just go sideways between like 30 and 45K for a year, in my opinion, and then go up. Or we get like a major FUD event like we did at 6K, and then we break down and recover from there. Why are you saying that? Here we go again, Cred.
Oh, well, the 6K analogy. And the
but I mean, can't you just make that? I think it's pretty...
Yeah, of course you can. What do you think of this weekly, by the way? Because for you were like, if it closes red, it's all over. And it gave like a very bait type of close, right? Where it retraced the entire rally, but still technically closed above the level. And as you mentioned, it's that 38 that got more or less bought up again. Seems to be like a short-term value buy, if you will, as far as TA stuff goes. So basically you had like, biggest day ever, full retrace to the biggest day ever, and then a bounce at the moment, right? So is there any kind of weekly close, daily time frame, alpha for 38K for you at least? Or is it just like, look, this is an area and it's where we're trading for now?
I mean, it didn't close as badly as it could have. I think like legitimately, if we closed red, this would have been fucked. Like the chart would have just been too ugly to repair. Right now, like it closed above the resistance still. It obviously doesn't look too pretty, but I actually think if you're like super, super bullish, you could take a stab at 38K and have like a stop at 35 or something, and try to kind of aim for the top of the wick that we've had last week, right? Because that's something that oftentimes happens when you get like these illiquid moves up and then back down again. People get really bearish, and then you engulf that kind of illiquid move before actually deciding the true kind of direction to go. So, I mean, if you're like mega bullish, I could see a trade where you take 38K, stop at 35, target like 45, and go from there.
Leverage?
Shit. 10x, of course.
So only half the default on Binance.
Can't believe they hadn't changed that. I called CZ out on that when we interviewed. Anyway, not to say he would change his mind because of me, but like he admitted it was kind of dumb. But
right.
Anyway. So do y'all remember when everybody was like, it is just consensus, tops have to be blow-offs and bottoms have to be capitulatory? Like since that consensus was so so broad, like we've not had a blow off top or a capitulation bottom since, like everything's been rounded. Everything this cycle has been completely rounded off, particularly with Bitcoin, but with ETH as well. Really, the blow offs have only existed on the highly liquid stuff, or things that went like 30x. But do you think that we can just continue that, where we don't really kind of, what would you call it, like push liquidity, or like force people to capitulate or whatnot? Do you think this is an acceptable form of bottoming, these kind of lazy roundish bottoms with just short wicks?
I think so. I think the market is getting to a decent size where you don't actually have to blow off and capitulate every single time to kind of make a big move. That said, I would obviously prefer kind of when people get, like, it sounds bad, right? But when people get liquidated, you get the best entries. They're forced to sell where they don't want to sell. And it's just, as a trader, it's easy to get into it. So I would prefer that over whatever we have right now, which is just basically just sideways and boring kind of trading environment. But I honestly think at this point, the market isn't as tiny anymore. So you can actually just bottom and top without just seeing big liquidations either way. I'm not entirely sure if this time, like the current situation is going to end that way, just based on the fact that if we get any macro event that is like really, really bad for the S&P or for like in general, like the stock markets, we're still going to capitulate, right? If the stock markets capitulate, crypto is going to capitulate, in my opinion. But I don't think it has the same kind of need for a liquidation event if it doesn't happen anywhere else. I don't think we're going to liquidate people if the S&P doesn't go down. And I don't think we're necessarily just going to have like blow off tops if the S&P just doesn't go completely crazy. I think we're kind of caught in that net now, which sucks obviously as a trader, because you don't want to have it too correlated. But I think that's just going to be something that we're stuck with.
I think a lot of the blow off top stuff basically is a function of market structure changing. And you have all these stable coins and different fiat on ramps into coins directly without trading the BTC pair, etc. You had a lot of blow off tops. It just wasn't in BTC, right? It was on these altcoins. Some of them even were in illiquid form in NFTs as well. So I still think the blow off top stuff is relevant. Maybe it's just less relevant for the top stuff like BTC, somewhat ETH, but even that looked a bit spiky. Like you look at the monthly time frame in ETH. And you think, yeah, that's kind of there. On the note about people being forced to sell, they can be forced to sell because of, blowing up on a volatile move. But that also works in the other way, right? They could sometimes also be forced to sell just from a bunch of sideways, the market grinding into nothing. So forced sellers exist on both sides of the volatility spectrum. One is when there's no vol and they're just fucking mentally trapped or bleeding out funding if it's like a futures position, whatever. And there's the high vol capitulation where obviously the move takes them out. So maybe we shift from one style to the next where you don't get the blow off top in the volatile fashion, but you just have to survive maybe months. If not more, of just grindy, awful price action. It's not pleasant in any case. So I still think no free lunch. It's just it might change its form a little bit and seems to have just looking at stuff.
One of the ways for me to actually see blow off tops, which this was helpful, not that I necessarily traded it super well. Even in 2017, people said it was not a blow off top back then because, you didn't have like some gigantic wick or something. So that caused a lot of hopium
yes
as we went down, but you started seeing the blow off top pretty clearly if you meme it into linear, which I don't actually think linear charts are really particularly a meme.
I think they're a great meme. I love linear charts, man. They're just a wake up call, you put some of your favorite altcoins on linear and you're like, oh man, what have I got myself into?
Yeah, they may be a meme, but they're like a useful meme.
Yes. They're just like a recontextualization of the same information, right?
That's very, very well put. A recontextualization, because you see like, oh, look what happened over the course of 3 weeks. Bitcoin went from like 5K to 20K. And I think when you look at markets in that capacity, even our move this time from January, from 30K to 60K. That's a doubling of the largest asset in the space. Looks a little bit blow off topish. So maybe it's counter argument to my own. But then you go across the spectrum to like Solana, for example, and, chopped around after whatever, a 10X, and then, blasts up for 3 weeks to hit 250. This looks like a classic market cycle type of thing, it looks pathetic. And it looks like it needs quite a lot of repair, even if you're going to be bullish. That said, I was talking to Moon Overlord and some people on Twitter, and, we're talking about whether the Solana equivalent to Ethereum's drawdown, the 96% drawdown from 1,400 to 85, in Solana terms, that would put Solana at like $15. Maybe that was a temporary bottom thing, asking Solana to go down another 80% from here or whatever, because it's just had no real bounce.
I don't think so. I honestly think that's realistic, just looking at the chart, right? And you can argue about the fundamentals all you want, but when the chart just looks like Verge did in 2018, it's pretty tough to be bullish on it, in my opinion. So
Dogecoin dark, right?
Yeah, Dogecoin dark. Good times.
Few.
I mean, people actually thought that would kind of upset the crypto space, that coin, and then it went to zero, basically.
Yeah, and then privacy coins upset all of us, right? That's how that trade ended.
Yep, exactly. So I don't think it's unrealistic, honestly. Looking at the altcoins, I'm just across the board pretty bearish on them.
Any others you don't like or want me to bring up?
Oh, you could almost like bring up anything. Dogecoin. I mean, all of that's a good meme as well. The Andre coins.
Yes, that is a good meme.
Oh man, yeah. I think Atom is actually an interesting one to look at, because I'm interested when something is showing relative strength. Because
like the decoupling.
But it's just decoupling from other altcoins, other layer ones. But I mean, Atom, I wouldn't say that looks great, but on a relative basis to most of these others, like it looks propped up, and it makes me wonder: is it just going to be the last to fall? Because it didn't pump as much as others, and maybe that's why it's holding up all right.
Fewer bag holders to sell, right?
Yeah, fewer bag holders or stronger hands or something like that. This was also one of those that had finally some momentum into the year, so maybe that's part of it. This one just fascinates me because it looks different than the others. How do you actually think you can play that? Like, is this where you would run if you think there's a temporary upside in the market, or do you think because of where it is, it just means it's the most obvious trade to the downside if everything continues to fall over?
I think like longer term, right? In the next couple of months, you just try to long Atom like at a good price and short other coins. That's kind of how I would try to play the relative trade. I cannot short those. So for me, it's just like I have to buy this whenever I think Bitcoin is actually cheap, because that's kind of moving the market right now anyway. But I think the relative trade in these kind of circumstances is pretty much the best bet you can make.
Yeah, I'm still not over my L1 trade fatigue, well, L1 into L2 and EVM trade, however you want to classify it. I'm not over my fatigue of that narrative, especially because ETH, gas has dropped so much and ETH fees are becoming affordable because like no one really gives a shit outside of like a few NFT mints. That just really kind of flies in the whole EVM layer one basket hedge fund darling trade is really a product of its time, right? And product of its time, i.e. ETH has pumped a shit ton and it's expensive. How do I ride the coattails of that while still getting like really good terms on either a fundraising deal or just on the token itself in secondary markets? And I feel like most of that has unfolded already, and then you get to play the game again where like ETH is cheap and it's dumped a lot, and look it's the layer one, it pumps a shit ton, and then you've got like a bunch of other EVM chains trying to bite at its ankles after it's gone up a lot, and you basically have Sol Luna AVAX, or just I guess Sol AVAX 2.0 3.0 into infinity, right? Or in perpetuity, I suppose. Maybe that's way too cynical and there's like some multi-chain future fragmented different use case yada yada, but I still think it's like a tad early, at least where the market is right now, to be thinking in those terms.
here's that Atom ETH chart. I pulled it up on the stream. It is, I mean, it's healthier than many things look, but I'm not sure that you can clarify this as anything beyond just kind of a range. So I'm not sure how you would actually look to play this, but it's obviously showing some degree of relative strength. An area of coins that was looking at, whenever I feel like I'm trying to adjust my lens and see like what looks good, what looks bad, what's worth holding. An area of the market that really freaked me out this weekend was the Metaverse plays, game coin type stuff. So I was looking at Axie. Now I can't find it in my Decom chart.
I can bring it up.
But I got it now. This thing, it looks, oh my God, like what do we do with this? Like doesn't this look like this is going to zero?
It does.
I mean, as you said, it's like a market cycle chart, right?
Yeah.
It's just going to go back to where it started from, right? Just looking at it. I mean, that's just how these kind of charts play out. They give you like a nice exit bounce at some point that takes it like half the way back up the pyramid or the Eiffel Tower, whatever you want to call it, and then it just goes all the way back down, I think. And
yes, but the counter argument to that is Arthur 0x has a really nice Lambo.
Yeah.
Is he long Axie?
I mean, they were seed, I think, or like mega early.
So
I just saw a thread where people were like bashing Defiance's track record or whatever, and he was like, "Well, it's all about like big winners, and we invested in Axie at like whatever zero, basically."
Yeah.
So that was fun.
We have a better price than you.
Yes, exactly. Yeah.
Yeah. I gotta say, like with all the metaverse coins and all the gaming coins, especially, right? We all know how, like every gamer anyway, and I mean, I think you guys dabble a little bit anyway in that space. Know that all games kind of have that time and then they disappear, right? Just look at Fortnite, which is still around, but not even as close to what it was of a movement a year or two ago, right? And that's the case with almost any game. And then if you add like that with cryptos, which stay around for like a year or two or three and then disappear, you have like two of the fastest moving markets or like fastest moving things in general, and you combine it. So I think when a crypto game kind of falls out of favor, it's just kind of fucked. I don't think it's just gonna revive again because that's just not really how games work. People just get tired of it and then they just move on, play something else. And that's not necessarily how crypto works either, right? If you just look at the old cycles and the old coins for like Litecoin, all that Bitcoin Cash, the market just kind of moves on. And I think the gaming world and the crypto world, if you combine the two, it's just going to be big moves to the upside and then forever bleed out for most of the stuff. So, I mean, if you're holding game coins, I mean, I don't really see the longevity of it, but maybe I'm just too cynical. I don't know.
I'm looking at the Sandbox as well, which is a similar setup, a similar chart to Axie, but it looks even worse. Whether you're looking level to level, whether you're looking at my boomer moving averages, like this looks like a short every bounce or sell every bounce down another 60 to 70% is on easy mode, kind of. And to your same point, like it's just so rough. And these in combination just made me think, like, even if I'm not willing to long, like be super long ETH and BTC, this is certainly the type of thing where I feel like a pair trade would be relatively safe.
Good pun.
And I want to be able to take these trades. We deserve these trades. And here's this one will get you excited too. Sand is a number 39 market cap.
Ugh.
The liquid market cap is $3.3 billion. And the fully diluted valuation is $8.8 billion.
Yeah.
Do y'all know what this
Good
is?
luck with that. Jesus.
Good point.
Yeah, I mean, I have no idea how people can just look at the current market and then be like, okay, this is fine, because it is not fine in the current market conditions.
Yeah. So if you're wondering, could this actually go down another 60-something%? Like it would take it to a $3 billion fully diluted valuation. It's not exactly what is my neighbor Alice. I
think this is one of those metaverse land plots type of things.
It doesn't look bullish.
No. These are the expert insights we've signed up for. It went from like $30 to $6.5. It's like, it could be better. Not great.
Okay, somebody just said in the chat, Penn National Gaming fully diluted is $7.5 billion. And they've got like, Barstool and actual casinos and all kinds, actual land.
I feel like the metaverse kind of timing was really unlucky rotation wise, because narratively it's pretty cool. Same with the GameFi in the, there's definitely short-term juice for stuff like that. But the market basically topped at that point. And then you had Facebook transition into Meta just before all the normal risk assets or, equities and indices nuked as well. So that whole thing didn't even get a chance to live properly. I think people have really weird expectations when it comes to new sectoral rotations, because they saw DeFi basically go on for like 2 fucking years of rebranding, up only, and just that. And that seems to have become, imbued as some sort of base understanding for when you get a new sector, how do you expect it to behave? How long should it be around for? What's going to happen from old tokens to new coins, blue chips, all that type of stuff, just like as a framework derived from that. And I just think it's probably, I'm more comfortable arguing that the 2-year, basically infinite DeFi up only bull market was anomalous more so than the normal way you get sector rotations. So I'm just not sure it provides a very helpful mental map for thinking about these things. I know a lot of people got trapped in the metaverse trade or the metaverse sector trade based on expectations of DeFi. Yeah, I'm trapped in the metaverse. The Oculus Rift is, you can't take it off your head. Yeah. So I don't know. I feel like we were spoiled essentially by DeFi 1.0 and then 2.0. We didn't talk about 3.0, and then NFTs came from that. Just like if you really zoom out, it's just like kind of an Ethereum derivative trade to some extent, right? And you got like ETH going from 1 to a zillion, and then we got DeFi and then NFTs and all this kind of stuff back to back, kept going from 1 to a zillion. I mean, it had to take a bit of a breather at some point, and it seems like Metaverse was like, no, this is enough. let's stop, draw the line there.
Scary enough, I've actually heard that gaming plays are raising really, really strongly right now. So
yeah, I've heard similar. I'm not surprised, to be honest. Narratively, it's really easy to make that argument, right? You're like, oh, they're digitally native, and look at gamers, they already spend this much money, yada yada. And, the sheer numbers involved as well. So that doesn't surprise me at all. But as Don and I discussed, if you look at, and I know it's not necessarily representative, but if you look at like Reddit, Twitter, etc., how most of these gamers kind of react to NFTs, blockchain, crypto, or any ilk of financialization, they're not super happy. That's not necessarily the audience is going to drive your sector forward. And that could be for a number of reasons, as we've discussed and can discuss. But yeah, I think that the dispersion between the kind of public and private markets is continuing. And as long as you can kind of just take, almost ICO style, you take crypto / blockchain and you take another sector and you kind of smash them together until you got raised a bunch of money and have some sort of deck. I don't think that's going anywhere,
And, I think maybe a good comparison here of what can happen, and you brought up DeFi, is synthetics, where it's a lot of promise, interesting technology, and then a lot of technological rigidity, I guess, in terms of not going to where the product could scale. And then not a lot of users. And synthetics.
How many users? You know that number, right? They said at one point they had like 6 active unique users or active users.
I was thinking 17 or 20 or something like that.
Oh yeah, massive difference. Yeah.
I mean, that's 3x. You're active. Pump it. But point being, like, if your active users are in the dozens, then it probably doesn't support multi-billion-dollar valuations. And within DeFi, cool tooling, cool engineering is one thing, but it could not sustain this massive move that it had. And this is just what it did on Binance, right? Like it was much lower than that if you go back to whenever it was, seeded.
Oh yeah.
And inevitably, if you don't get those users, if you lose the game of attention or actual activity from people in the space, like it's gonna full retrace. So I think that ends up being, your Alice chart, and we'll probably see it on some of these. I don't know if it'll be on Axie or Sand or others, but
BTC.
but many of them that will happen, and it'll be because no one's using it. And at some point, those fundamentals of who's using this, who needs this product, will play out. And I think where maybe we'll find some value, or maybe we'll avoid complete retraces, is on the things that have some inherent value, right? And my question for you is, within the DeFi realm, because we've put gaming in the purgatory box here, but within DeFi, like, can it ever escape, right? Like, can something recover from, because it's kind of front running the rest of the market cycles, right? Like, it's already wrecked. Is there anything in DeFi that you think can make up for it?
Duck?
Tough. I honestly think
there are things in DeFi we use, like
yes, but I mean, a lot of the stuff that you use, you don't actually need the token to really use it, right? Like I often have that problem where it's like, yeah, this is cool and all, but why would I be holding this coin or this token or whatever? Because it doesn't really give me much, and I don't want to speculate on it necessarily, but for me, it's just a kind of thing of market cycles, right? DeFi has been in the bear market, and you don't necessarily need to catch the absolute bottom, so you can just wait till it kind of picks up again. And I don't think the point in which it picks up again is when some of the biggest devs in the DeFi space leave. I mean, that just does not seem like...
Could that be a bottom thing?
I don't think so. It could be, definitely, but I don't think they're necessarily people that would leave at the bottom. I'd much rather think that there are people that are going to come back and create the bottom at some point. But that's like far off into the future, I think. But I could be too negative on that front. But my entire view on the altcoin market is just basically a lot of promise, basically the same that we had in 2018, a lot of promise and not that much delivery. And until that changes. And I think the gaming sector is actually one of the ones that shows that the best, because the games are just shitty, right? The crypto games that you have are just shitty, and people just play it because they convince themselves that they're not shitty and they can make money with it. And then at some point the hype leaves and no one wants to do anything with it. And I feel like that's crypto, that's a lot of stuff in crypto. But every single cycle, we obviously get better products, right? That's been the one thing that has been consistent, is that 2018 was a bunch of shit. 2019, 20, 21, now 22 is much, much better, but still shit, in my opinion. That's just kind of my view on it. So you can speculate on all of it. You just look at Mana, for example. Look at the game. It's the worst thing I've ever seen. I don't know why anyone would ever play this shit, but it attracts like big buyers because no one knows how they can get exposure to the metaverse, and just buy the biggest garbage and go from there, right? And you just have to look at the chart and the valuation of Mana, and then it's just wild. And I think that has to retrace a lot. Not necessarily that Mana project, but like in general, that hype has to retrace a lot. Stuff has to get cheaper again. And then we can just kind of watch the new stuff get built. And then that's going to get hype again. And then we're going to go for the same cycle. And at some point, maybe in 5, 6, 7, 8 years, we actually get people that know how to build games that are good, and then implement crypto into it, or like people are actually really good in finance. And I think DeFi, there's some promise there, but it's just not enough, in my opinion, anyway. We'll see.
Decentralized.
Only in crypto, right, can you basically try to build a gaming-oriented sector, but essentially concede that the game is shit and that it's glorified yield farming and be totally fine with that, right? It's like that's so insane to me. I don't know. It seems, it shouldn't be controversial to posit that as a base case, if you're going to have a gaming sector play or do something with gaming, that at the very least, the game shouldn't be shit. Right. And then we can talk about the economics of it, the tokenomics and integrating blockchain. And is it just glorified yield farming with extra steps, which Kyle Samani seems to agree. And apparently that's fine. That's a whole different discussion. But like at the very least, can we just get the game part right? Make it fun and not, have a good gaming experience and not this is better than your minimum wage job in the Philippines experience. I think that's just way too dystopian for me. Maybe I'm too soft. But yeah, I think on the market cycle point, it doesn't hurt unless you've got like a clear investment edge or deal flow edge or whatever it may be. I think a decent starting point for most people, and this includes me, is to essentially argue that if I'm going to be buying stuff that's where I think it's cheap or value, etc., for me, it's Bitcoin and ETH. And then if the cycle itself picks up, I'm going to look to ride the coattails of the kind of hedge fund darling trade or the sectoral trade or the really early outperformance or whatever's hot at the time. And whatever that is generally pretty hard to foresee. And it usually takes shape kind of on its own out of nowhere or not out of nowhere, but you know what I mean? It's not the most obvious play all of the time. Like the thing that's going to be the strongest, later this year or next year, whatever, we probably don't know what it is, right? Sectorally. And there are many totally reasonable candidates and cases we can make. We simply don't know. So I'm happy to basically be a boomer and punt BTC and ETH. And then when something reasonable emerges from a altcoin sector, where are the flows going? What's the hype? Where are the raises and how's the token doing on secondary markets, etc. I'll look to catch a piece of that pie. And Solana, yeah, if you didn't get into the seed, it sucks. But you had Sam telling you to buy, what was it, $3 and give me all your soul and fuck off, and it went to like 260, right? So there's even when you're quote unquote late to those types of rotations, if they could even be called that, there's still plenty to capture. Mm-hmm. That's at least preferable to me to trying to buy stuff that's gone through 1, 2, 3 market cycles and hope that it's different,
Yeah, someone in the chat said Mana is the closest thing to a metaverse that we have. And
fuck then.
Yeah, that's kind of my point. Like, if that's the best that we have, then, what the fuck are we doing, right? This is just obviously my opinion, and I'm not 15, 20 anymore, so maybe I'm just not at the cutting edge of like what games and what like networks should be. But if I find them like way worse than anything else that's out there, like if you want to implement something into crypto or make something that works with crypto, in my opinion, it has to be at least as good as the counterparties outside of crypto, right? Anything else is just going to be hype, and at some point it's going to go back to where it came from. Because if it's just not better than what we have, it's not going to be valuable long term, in my opinion, anyway. So, yeah, that's just my point to that. It's what it is.
Yeah, I'm just trying to figure out like when does it make sense to carry risk again. It took 1,000 days from the very
fuck off.
from the very top of 2017 to then like full breakout mode. So like when October 2020, when Bitcoin kind of cleared 10K and then just went up only for several months. It was 1,030 days or so.
My God.
So I guess my question would be, if we apply a similar time-based narrative of just how long does it take to repair a market, get everyone like really depressed. In my mind, crypto really was pretty. The Coinbase IPO in April or May felt like kind of the climax of sorts, and then there was a lot of stuff after that, but there was in 2018 as well, like individual things that did stuff. And from
great sentence.
Thank you. 1,000 days from then would be roughly January 2024. So that would be
good to me.
That would be a long time for Don to be at the beach.
I know. Yeah, even for Don. I mean, it seems unfair. Like, it seems unfair to some extent because Jesus himself was tempted by the devil for 40 days and 40 nights. I have to do 1,000 days to get another bull market. I mean, who's really suffering for the sins of humanity in that example, right? I mean, look, realistically, I even like wrote this up earlier. I've got this cute little doc on my notepad. I don't know if my screen share is coming up. It's kind of almost answering your question. What kind of stuff would have to happen for you or one to buy? Right? Or take on risk, whatever. Now, the obvious one, although timing this is going to be somewhat impossible, is whatever this mixture of geopolitical plus macroeconomic certainty just fucking evaporates, right? Or whatever the point of that, where it becomes oversold or bottoms on bad news, whatever weird combination you have. Like when bad stuff go away, number go up, right? So I guess that's one way to look at it. But in terms of at least some of the frameworks that I look at in terms of when I want to carry risk, or if the market kind of looks like shit and I'm waiting for something to bait me back in. Some of the things I've listed here is either some sort of high volume capitulation or liquidation. And we mentioned that in our kind of wipeout example. And now the danger there is it could be leading, right? So when you get the 6K breakdown, you might think, oh yeah, this is it. This is, the big capitulation and the vol expansion I've been waiting for. And then you try to buy it at, 5.5K or 5.2K, whatever. Like if you step in front of that way too early, you eat shit, right? You just get run over. So there's always a risk there. But in general, like some sort of high vol capitulation or liquidation driven move is consistently one of the better entry mechanisms into crypto. The second one is more kind of TA based again, is when stuff gets reclaimed, when you get constructive looking charts, or if you want to be a boomer, it's when trend metrics get flipped. Now, those at the very least give you some sort of invalidation, right? Be it 50 weekly, 21 weekly, 200 daily, yada, yada. Like the market is below most of those, I think, at the time of recording this, right? So if those kind of things get reclaimed, even if it's not necessarily, oh, this is the all-time high rally, finally we made it type of move, you at least have an idea of where to do business, where that looks like and where you're wrong, which is quite simple, is the market falling back below those reclaimed levels or, weighted average price lines or trend metrics, whatever. The third one, we also mentioned kind of low volume capitulation, where essentially when the market bottoms, be it in a range or after the volatile moves already played out, whatever, but it's not obvious that it's bottomed and people are expecting another leg. And, is this the consolidation before another move lower, all that type of stuff. And the market just grinds, right? It just grinds and it goes slightly, mostly sideways, diagonally up, whatever. And it's just like a total pain in the ass. No intraday moves are tradable. You just have to kind of grit your teeth while half the time you're crapping yourself, checking the chart in the morning to see whether the other follow-up minus 50% move has happened, right? So that's kind of Bitcoin at 3K after the 6K breakdown, if you will. And the other two, the grind into aggressive bearish positioning that gets blown up. So, let's say to take present price action, the market just continues to do fuck all at 30K and it goes between 31 and 33 and your time frames you trade keep getting lower and lower. You pay for TradingView Pro Premium Plus, so you get the 1 second chart, you're trying to scalp it and make it all back. And the market just keeps grinding and it seems like it's the same price every single time you check it. But you notice in derivatives data, you've got like a pretty one-sided positional build up and funding is just like increasingly negative and, derivatives are taking a stance, but the market's basically absorbing that, moving sideways, and those short positions paired with increasing open interest become quite expensive to hold, and eventually they get unwound, blown up, and you get a bit of a momentum pop as a result of that type of positioning getting absorbed essentially. And the last one, this is probably the least clear one, is some sort of value buy or deviation of value buy, and this is when it's cheap or your high time frame support, etc. And that's your kind of high time frame levels to do business at, where you'd almost feel like an idiot if you didn't. For example, the first test of 30K coming down from 60K or whatever it was, or if the market falls to like 10K, 20K, like apocalypse scenario. Yeah, maybe you don't have any of the bull metrics, yada yada, but it's so quote unquote cheap. You just buy and you figure it out later. Sorry to go on for so long.
Barry told me this weekend.
Oh god, yeah, he's been active on Twitter. He's been like chatting shit. I saw him chatting shit to Jim as well, being like, "Oh, just DCA." It's like, come on, man, give me a break. But yeah, I know that was a bit of a tangent, but those are some of the things which I think are worth kind of having on one's radar, and I'm not currently there.
I like that because Cred, I'm about to blow some minds here. We do know that the chart is going to move to the right. We just don't know. we just don't know how it's going to.
We have some information. Good. Yeah.
But we're trying to figure out how's this going to squiggle in, and those variety of outcomes that you mentioned They will look obvious in hindsight, as it always does.
Right.
But what we're trying to say is when do we gain conviction from that? And a lot happened from the top to that point in time. This is that 1,000 days after 2017, right? A lot happened. I'm not saying it didn't, right? A lot. That's a big move down and a big move up, and COVID and recovery, and then it was just tension before we really blew the lid off. And so there you can have a gigantic range. That was 3K to 14K, right? Like many multiples involved there. So in this new scenario, a ton of stuff can happen in the meantime, and it's not even to say it has to wait for that 1,000 days. There are some things in Bitcoin in particular, and as long as Bitcoin is the market leader, that's important. The halvening stuff, the physical reduction of supply that hits the market, the demand for coins from miners and hash rate and all that kind of stuff. I think it's just worth considering on these longer time frame charts. Like, do we need to be prepared to wait years until we get something, a moment that's truly decisive to say, like, this is when this market is truly ready to do new things that are bullish.
New things that are bullish.
Well, like you gotta get that moment, right? That feeling in people where they're like, I'm not touching that stuff again, and they have to get out, forget about it, and then get dragged back in, or a new batch of people get dragged back in. Your notional new money buyer in 2020, 2021, either they didn't buy in 2017, didn't want to miss the boat again, or they were begrudgingly back after getting wrecked, and they saved some money because they got a job after they went broke, and we're seeing that now. And yeah, I'm trying to picture in my head, because to be quite frank, like I want to be prepared for that, and I don't want to get wrecked in the meantime. Like if you did okay, you don't want to get wrecked. You want to be prepared for when is the trade easier. For all his flaws, Gainesy does a good job with this in my mind, of basically saying like the trade is easy or the trade is not easy. And he only wants to trade when the trade is easy. And I think there's a reason he's off, gambling or playing Baccarat all the time or whatever right now. Mm-hmm. In his mind, like the trade is not easy. And
that's why I'm currently on an island surfing as well, because fuck that.
So when Don is back at his computer station in Germany, we know, like, pay attention.
We're down 50%, yeah. Isn't that what happened last time? You went on holiday, it was sideways the whole time, and as soon as you landed, the market dumped. I think I seem to recall something.
Yep. I mean, it always moves when I leave or when I come back. It's never like in between, which I don't really mind too much, because I'm positioned. I can position myself if it dumped, or like if it dumps while I'm coming back. It's pretty nice. Then you can just position yourself for the dump, and if not,
I also think trying to buy the bottom in general is so fucking romanticized and overrated. I can't think of a more overrated thing. Actually, I can on-chain analysis. But anyway, like on that specific note, like if you think about the people who did like super, super, super well in crypto in this most recent cycle, etc., it wasn't necessarily people who bought the Bitcoin and ETH bottom, right? It was the stuff that happened after the market had bottomed and as it was trending up, that those crazy asymmetric, asynchronous players came up, and those were the real money makers and multipliers. The only reason the bottom is romanticized is when the market looks like this, the prospect of it coming late or being at a lower price than you're comfortable with, whatever, is super terrifying, right? And so if you're someone who's going to be on a mission to catch that, you gain this kind of social capital, and it's a fucking noble cause that, okay, you can rest easy now and stop worrying, the market's bottomed, etc. But really the lowest entries aren't necessarily and are rarely the best entries, right? Those aren't the same things. You can buy low, right? But then if for example, you bought the bottom and the market moves sideways for 6 months, you then hate your life, it spikes up 20% and you sell it, then what good is that bottom entry? And we saw that a lot with people who bought at 3K. The market doubled and went to 6K, and they were like, oh my God, finally I get to leave purgatory. And then it went up like double from that and kept going, et cetera, et cetera. So I don't know. I think it's super overrated being obsessed with the bottom, and it's good to punt at those extremes. But even if you miss it, the opportunities that become available in the market, which starts trending, there's plenty there, even if you don't have the perfect bottom tick tweet or buy or whatever.
I like that a lot, Cred, because I want to point out for at least my own story, and I know some of my friends as well. Like I made money on one, but when you look at the chart, you would think you made all your money on number one. This is visible on the stream, not for you guys.
Oh, cool.
So that was like, Bitcoin 10 to 60K or whatever. Like you think that's where you made all your money. I did make money there. I made enough money then to kind of be dangerous. But then I lost a big chunk of money on number two after we topped it, and then we do the 30K grind thing. But where I made the most money is the recovery off of summer 2021. So like July to the top towards the end of the year. And that's where I made the most money, is the part that looks like the complacency component of the whole cycle, right? Or the least impressive. It's like, oh, back to where it started. But that's where I made the most, because that's where the most action was as well, like in the whole layer one trade and some of the big NFT moves and all that kind of stuff all happened in that, which is very much on par with what happened with a lot of people back 2017, 2018. They made their money in January 2018 after Bitcoin had topped, and it was all the other stuff that was going way crazier. And that's when the difference maker occurred. So to your point, I think you're dead on. It's a good reality wake up call for me, is like, I don't have to catch the bottom because I can make money knowing there's like follow on waves. So,
but damn it, we're going to try.
We're still going to try. We're going to talk about it every week.
For sure. Yeah. Same.
But yeah. And this is just my scenario, but I do think there's like quite a few people in the market that were similar that, made the most money on the last leg.
I mean, the thing is, there are people that bought the exact March low 2020 and sold the exact Bitcoin top and still got outperformed by like a new entrant in the market that just bought like the
Shiba.
Bored Ape. or Shiba. Yeah, I mean, it's like that's just how it is, right? And I mean, the new market entrant can buy in 2021 near the top and still make more money than the guy that actually caught the bottom on Bitcoin itself. So I definitely agree with you too. You don't have to, like, the moment the market turns, there's going to be big opportunities everywhere. You just have to kind of catch one of them, right? And be that like the absolute bottom for Bitcoin, or be that like the bottom for NFTs or for DeFi or whatever, it doesn't really matter. And the Bitcoin bottom is going to come before everything else. So if you kind of miss the Bitcoin bottom, and you think, okay, shit, now I missed like the crypto run, you couldn't be further from the truth, right? And we've all lived through that so many times. And the thing is, if you lose too much money while gambling for the bottom, you don't actually have the money to take advantage of the bottom once it's actually there, right? Let's say you lose 70, 75, 80, 90% in altcoins, and then you see the bottom forming and you're like, holy shit, this is the bottom. And oftentimes, you do kind of feel like it's the bottom at the bottom. At some point, you're just like, oh, this is just way too crazy. That's how it usually goes. The market just doubles, and you're like, okay, the crypto market's just bottom, right?
Not a single exchange is working. You're like, oh, okay.
yeah. Now we're in it for it again, right? And then you have like 10% of your money left, right? And you're tilted off of the earth. You have like, maybe you have that 10% in a random shitcoin from last cycle. And then you're like, I don't want to take the loss on this. I'm just going to hold it. And then you miss the entire run just because you tried to time the bottom. And I think that's one of the worst things to do. That's why you see so many people that have been in the space for a while say, just chill, right? And it's weirdly like the kind of consensus on Twitter is weirdly very, very like, good in this instance, in my opinion, by just saying, okay, guys, just chill, take a little bit of a vacation, take your time, and then once it is easy mode and once the market has doubled, there's actually going to be more opportunity than at the actual bottom itself. So I love what you two said.
And then when you're euphoric, you just have to DCA out. Like, you have to force yourself out over time, or else you'll just get stuck at some point.
You can't sell on the way down, right? I had a thread about this. It's so fucking naive. especially in crypto, assuming that you'll get like this super. I mean, you might, but that's a way tougher trade than just selling on the way up. Because what will happen is if you haven't sold on the way up, the market nukes. Then you're thinking, oh my God, I should have sold. And then you end up putting yourself in a position where you're most likely to sell, where the market is most likely to bounce, right? Mm-hmm. And you set yourself up for failure, or at least for like definitely some tricky and suboptimal trade management. So you sell on the way up, and then, you might even be able to compound that if shit wipes out, which it always does, right? It always does. And when it wipes out, there may be just like a fresh trade available there, where you get to rebuy some stuff you liked and sold on the way up, maybe for like a cheaper price, and take like a shorter term trade, whatever. I think that's one thing that everyone's kind of got to learn the hard way, is that this whole idea that, I'm just going to like trail my stop, right? Or wait until the trend shifts and then I'll exit this position. It's really tricky. Most of the time it doesn't work that way. It's always easier to re-enter a bullish trade than it is to wait for some sort of complacency shoulder after you've already watched your net worth nuke, right? Like if you sell and the market rips like 10, 20%, so what? First of all, so what? Second of all, at least you've got evidence that the trend is still strong, and you've got some technical structure to work with, retests of resistance, yada, yada. Like the decision tree is much clearer, right? Whereas if you didn't sell on the way up and then suddenly the whole market's down like 30% and your altcoin's down like 50, 60%, I mean, God help you at that point, your decision making is going to be garbage anyway. So sell on the way up. I know that's very helpful advice now, but I did kind of mention it way earlier as well, for what it's worth, which is nothing because it's a fucking tweet. It's not worth anything.
Yeah, I mean, I forced myself to do that, and it was not comfy. Like I was like, I feel like an idiot. But if I had sold everything all at once, it would have been a terrible decision. But because I sold partials, I never maximized my net worth or whatever based on the Pico top. But you won't. But you do protect yourself so that even if everything goes to zero now, you're taken care of, right? You took care of your obligations for one. This is something that I've tragically am seeing play out again. People did not take care of their obligations, and now they're wrecked for tax stuff again, which is, I mean, I could not have screamed about it anymore at the end of the year.
I've seen that tick up recently as well. Yeah.
Yeah. And like, I feel bad for this guy. So goes something pay online. He had like an 8 or 9 figure account and he's broke. Because what he has left is purely to pay taxes for things he realized, which is absolutely brutal. And then the other thing is just taking care of things on this seasonality is the way you don't do that, right? Like the end of the year, if you treat it like a fiscal year, that's when you have to put your stuff aside. And some people, myself included, like because I took care of those things, I can't go broke, like I can't lose it all. Now you can still get beat up with what you have left, but you took out the part that's going to make sure you're safe with. You cannot make assumptions about future liquidity. I guess is part of that, right? Like the worst thing that you can do is just assume you can sell something that then there ends up being no bid, right? You talked about NFTs last time.
Yeah, Don, unrelated. How are your NFTs?
Yeah. No, I don't know.
No, I know you did, of course.
I sold my NFTs like I think it's 2 or 3 weeks now ago, and I actually made some bottoms with like my sells, and I didn't really give a shit because that's the only place where I could find liquidity. And funnily enough, they're like almost all trading lower now. And it's impossible to get out of them. So that's like the thing with, this is very well put from you, Ledger, earlier, that you cannot make the assumption that you're going to be able to sell this shit, right? And if you turn bearish on something, especially in the NFT space, it's a rush for the door, basically, because there's no bid. You have to have someone that buys it off from you, and that is terrifying. And
it's really hard. Like I have some stuff that I will absolutely carry to zero, NFT wise, because I own like 50 of them. Like I literally could destroy the market. I can't sell it. I can't make money on it. Like the best case scenario, I end up realizing the loss, like market to zero, and I get to realize that loss to counteract gains, but that's not exactly the definition of a successful trade, is that you get to market as a loss. Selling things for a profit, you have to do it when there is liquidity. Like when the FOMO is there, you have to do it, or else you just never will. And I think you're seeing that with Bored Apes right now. That I don't know how frequent the sales are, but I saw not too long ago there's like maybe a Bored Ape sale every 10 hours or something. And that is not a cozy place to be. And sometimes people wonder, like, why are people accepting the offers way below the floor? And Cred, you said it last week, it's because the floor is resistance.
Also, in the apes example, there's there's a specific market structure element there where 99% of the supply is held by hackers with iron hands. So it's understandable that the volume is so low, right?
Yeah. Somebody, I see Wrecked People, unfortunately in the chat, brought up a terrible thing that I did not want to think about, and it was that January 2024 timeframe that I brought up is going to co-align with the next presidential election. So that would be when the next president is installed. Is that
installed?
Same month. Yeah. So the election would be like November. So it actually is further evidence from a cyclical sense that,
See, if you had Josh, you'd have a useful point with seasonality in presidential elections, but you've got me and I've got fuck all to say on that topic because I'm not well educated.
But
so sorry.
I'm just saying it does align well. There's usually volatility in the stock market in the 6 months or so before the election's decided. So it would not surprise me at all if like the next true interesting Bitcoin breakout is not for like till the end of 2023, early 2023.
No, it'll be when Michael Saylor launches his presidential campaign.
Oh God, Cred.
Really take off.
Please let that be not a thing.
I could not handle it. It'd be over, all over. But I honestly think there's a good chance. I mean, I talked about this for months and months on this.
Man on the beach does not want the market to go anywhere for 3 years. It's like the least surprise. I can't take this shit seriously. It's so unreasonable, man.
Honestly, I would prefer the market to be volatile, right? But the thing is, it's just not going to be, in my opinion. I've been talking about this for months now. That I think it's just going to be the most boring range ever. And I still stand by that. I think there's a good chance that we range for a year, for two. I mean, if it goes really, really terribly, maybe for 3.
Wait, I got the year wrong. It's November 2024, not 2023. I'm an idiot. So we have to sit around for another year on top of that. But everything else is the same.
Yeah, but I mean, it's what it is, right? Markets. If you look at Tesla, for example, right? How long that took to play out, and then it goes at once, right? And I think that's going to be the crypto markets as well. It's just going to be terribly boring. People are going to get sick and tired of it, and then we're going to have some fun again. And the thing is, like, I think the best way to shake out the new market participants, especially like the last few years, has seen like a massive rise in stock market kind of new stock market entrants, and everyone is speculating now. And I think the best way to shake out all of those people is just by like dumping the garbage, like dumping GME, dumping shit coins, dumping all of that, and the good stuff just going sideways. And I could see that be the case for a couple of years. And then you kind of reconcentrate, the good stuff goes up, and then the bad shit goes up as well, because it's just how markets work. So yeah, maybe 2024, 25, who knows?
Cred, this is where that log chart can come in handy. So Tesla marked up massively over a couple of months in 2013, and then went literally sideways in $1 for 7 years, 8 years before it broke out. And I think you're right, Don. Like, I could absolutely see Tesla just hovering, whatever, 800 to 1,500. I know that's a large range, but it doesn't matter. At the point, untrending for a decade. Like, Tesla marks up again in 2030 because it becomes the #1 manufacturer in the world or something. Like, their production finally catches up in 2030. Like, everyone hates the stock by then because they've underperformed everything else in the market. And that's what markets do. They just punish you. They just absolutely punish you. Hopefully, with all of this bad news and disgusting commentary that we made today, that you'll be
it's vile. Oh my God.
You'll be prepared for how unfun the market is for the next couple of years.
Or it just bottoms tomorrow and rips, and this was the bottom, right?
It probably is.
But it's like,
it probably is.
Some of those time horizons, oh my God, what am I going to do? If it's like 4 years, 5 years, you must be taking the piss, right?
Well, I'm literally addicted to looking at the chart, right? Like I look at the price on my dadgum phone.
bad price. Do something.
Bad price. Or if it's like, or if I'm underexposed and it goes up 0.5%, I'm like, oh no, I'm going to miss out. Like,
oh, you've learned so much in the last 5 years.
I know, but
you've really come a long way.
It's this human psychology and this addiction. And I look at it every 5 minutes or whatever. I got to figure something else out. I got to break this habit. I need to go to crypto rehab.
That does not seem healthy. Yeah.
I need to get on an African beach with Don.
I mean, you really should. The thing is, I've actually looked at the chart twice today. Once this morning, and then the second time right before we got on the call.
I looked at it twice between the time when I got my kids unbuckled at daycare and the time I dropped them off at the daycare door.
What time frame do you look at when you open it up? Is it like the 5 minute, the 1 minute?
No. I don't look at the 1 minute. I look at maybe like the hourly chart or 30
Oh,
minutes.
jeez.
Yeah. still pretty degenerate.
It's so degenerate.
I look at the daily chart and I feel degenerate while on vacation.
It's because Legacy Open is usually like getting, people are looking at the markets. They sit down at their desks in New York or, their stay-at-home offices if they're still doing that. And like 8 a.m. my time, finishing dropping the kids off and I'm like, oh, what's going on? Got to get my fix. It's so terrible.
I mean, look, both sides of the vol spectrum get you, right? You either get blown up by like an outsized move or it just grinds and gets you via expensive funding payments or just like a lack of patience or closing your winning trade too early because it took so long to win. As long as you're aware of those tails and don't eat shit on either side, you kind of should be okay. If you have like some sort of macro crypto eats the world thesis. So, same old on that front.
I call the bottom when Ledger actually fixes his addiction. And that's going to be the bottom.
No. I did it last time too, man. I paid attention throughout 2018 and 2019. It was a huge mistake. And then literally the peak moment that you knew, I was the top player, if y'all remember the Hero beta.
Oh, yeah.
HXRO. I was the top player of their Moon Wrecked game. And literally it's a 5-minute up-down button. And you just press up or down on the next 5-minute candle. And I played it like all January 2019 or whenever it was like the least volatile. And I was so addicted to the markets, I just would sit there and just like do it from my phone and press up or down on a 5-minute basis. And the market would move like 50 cents or something. The market, like, it literally didn't move outside the tick size that existed on Bitcoin.
Yeah, it's a classic.
Like that's how slow it was. So.
Oh God, there's no helping you, dude.
when it gets that bad again, that boring in the market again, we're onto something, and it's probably time to pay attention. All right. We've blabbered about my addictions for a while. That will be
better than hearing about Don's addictions. To get the channel suspended immediately. So
yeah,
come on.
Yeah, next week, Don's addictions. That's it for this week. Thanks for joining us, everybody. It's been a pleasure. I'll get some help. I need it. Thanks for being here. Go to weeklyopen.com/FTX. If you do decide to continue the addiction, you can do it on the FTX app. weeklyopen.com/FTX. Make a trade, track your portfolio, do all the good stuff on the FTX app. weeklyopen.com/FTX. Thanks for joining us. We'll catch you next time. Bye-bye.